While the Indian rupee recovered some losses on Friday, the broader trend for the rupee remains negative. That comes even as the dollar marked a weekly decline. The greenback has been weighed by softer U.S. economic data and uncertainty over who will replace Jerome Powell when his term ends. Still, the rupee couldn't capitalize on the bearish dollar view. The Indian currency logged its fifth consecutive weekly loss, slipping nearly 3% over the past 5 weeks. That is the steepest such slide in 6 months. The currency is pressured by persistent foreign portfolio outflows and escalating trade tensions between India and the U.S. The U.S. now aims to include trade talks with Canada, Mexico and Switzerland by late October. That may boost its economy but unsettle global markets. Those trade talks are likely to amplify market volatility and add fresh momentum to the dollar. Meanwhile, the latest U.S. deal with big tech firms for export licenses is likely to further strengthen the dollar and pressure emerging market currencies. Separately, with the U.S. data pointing to a slowdown from tariffs, bets are for the Federal Reserve to ease as early as next month. The prospect of easing policies weighing on the dollar, and that is likely to lend support to the Indian rupee. The currency has barely made any advances against the greenback this year, even as the dollar has taken a hit. Analysts are predicting the rupee to test new lows in the coming months, with the Indian currency hovering just below its record week level. Analysts are predicting the rupee to remain one of Asia's worst performers in the second half of this year, despite strong growth. Foreign capital outflows have already put extra pressure on the currency. Indian markets have already seen over $11 billion in foreign equity outflows.